Tesla's biggest story right now is not one headline, it is execution. FSD, Cybertruck, Superchargers, and SpaceX are all testing whether Tesla can turn its future vision into real business results. Hi everyone, this is Ken. Today, we're looking at 4 Tesla-related updates. First, the FSD Canada Cross Country Challenge. Second, the lower-priced Cybertruck AWD trim moving closer to first deliveries. Third, Volvo EV drivers getting easier access to Tesla superchargers in Europe. And finally, how SpaceX IPO reports may be affecting Tesla stock sentiment. But this is not just a news recap. The real question is simple. Which of these updates actually matters for long-term Tesla investors? Because headlines can move the stock for a day, but execution is what creates long-term value. Let's start with FSD. Tesla FSDV 14.3.3 has reportedly driven more than 3,300 kilometers in a Canada cross-country challenge without human intervention by the second day. That is impressive, but I don't think we should say FSD is solved. The real question is not only how far the car drove, the real question is what kind of situations it handled. Highways are one thing, but real roads include construction zones, temporary signs, traffic controllers, bad weather, and unexpected stops. If FSD is going to become a mainstream product, it has to work in those messy situations. So this challenge matters, not because it proves everything, but because it gives us another signal that FSD is moving forward. For investors, Tesla's autonomy story needs proof, not just presentations. This challenge is not official safety data, but it is useful evidence. The key question is whether FSD can move from an impressive feature to a repeatable, scalable, regulator-approved business. If FSD eventually becomes a high-margin software product and supports Robotaxi, Tesla's financial model could change dramatically. But we are not there yet, so my view is simple. This is important progress, but not final proof. Next, Cybertruck. Tesla's lower-priced Cybertruck AWD trim, priced around $59,990, is reportedly getting closer to first deliveries, with VIN assignments starting. This version is expected to offer around 325 miles of range and 7,500 pounds of towing capacity. Cybertruck has always had massive attention, but attention is not the same as demand, and demand is not the same as profitable, scalable demand. Until now, Cybertruck has had a strong high-end image. It is bold, expensive, and polarizing. Some people love it, others think it is too extreme. So this lower price trim is Tesla's attempt to widen the market. Tesla is testing how much demand exists when the price comes down. The first deliveries will probably get attention, but the important question is what happens after that first wave. Does the delivery pace continue? Do new buyers come in? Can Cybertruck attract traditional pickup truck buyers? Or does it remain more of a niche product for Tesla fans? Cybertruck does not need to outsell every pickup truck, but it does need to prove that it can contribute meaningfully to Tesla's vehicle business. If the lower price trim improves volume without hurting margins too much, that would be positive. But if Tesla needs aggressive price cuts to stimulate demand, investors may see that differently. The hype phase is no longer enough. Now the market wants delivery numbers, demand quality, and margin impact. Next, Tesla superchargers. Volvo EV drivers are reportedly gaining easier access to more than 20,000 Tesla superchargers across 29 European countries. This sounds like a simple charging update, but I think it is bigger than that. Tesla's supercharger network is becoming part of the broader EV infrastructure layer. Tesla is no longer just building chargers for Tesla owners. It is increasingly supporting the entire EV ecosystem. And in Europe, charging confidence is still one of the biggest concerns for EV buyers. Even if the car is a Volvo, part of the charging experience is powered by Tesla. That is powerful. For investors, the positive side is utilization. Superchargers become more valuable when more drivers use them. If third-party EV drivers use the network more often, Tesla may increase infrastructure revenue over time. Tesla's brand also becomes embedded into the EV driving experience. But there is also a risk. If too many non-Tesla vehicles use superchargers, Tesla owners may face more congestion and longer wait times. So Tesla's challenge is clear. Open the network, but protect the experience. Expand utilization, but also expand capacity. Now, SpaceX. Recently, there have been more reports about a possible SpaceX IPO. This matters to Tesla because many investors see Tesla as part of the broader Elon Musk innovation ecosystem. Tesla, SpaceX, XAI, Neuralink, and other ventures all create a larger narrative around AI, autonomy, robotics, energy, and the future. So, when SpaceX gets attention, it can also support Tesla stock sentiment in the short term. But investors should be careful. SpaceX going public would not directly increase Tesla's car sales, it would not directly improve Tesla's margins, and if SpaceX becomes publicly investable, some investors who currently buy TSLA for Elon Musk exposure may choose to buy SpaceX directly instead. So this could support sentiment, but it could also divide investor capital. SpaceX IPO reports may influence TSLA sentiment, but they do not replace Tesla fundamentals. Tesla still has to execute as Tesla. So let's bring everything together. FSD is showing progress, but still needs proof. Cybertruck is moving to a wider price range, but demand still needs testing. Supercharger is becoming infrastructure for other EV brands, but Tesla must protect its own customer experience. SpaceX may support the Elon Musk narrative, but Tesla's own fundamentals still matter most. The bigger theme is this: Tesla is being judged less on vision now and more on execution. For years, Tesla's story was about what could happen in the future, but now investors are asking a more serious question: what is actually being delivered? Finally, Tesla stock has moved higher and is now above the $430 level. That shows investor sentiment remains strong in the short term. But I don't think we should look at price alone. The stronger question is what supports that price over the long term. Is FSD becoming more capable? Is Cybertruck demand expanding? Is Supercharger becoming a real infrastructure business? Is Tesla protecting margins while investing in AI and autonomy? Those are the questions I care about as a long-term investor, because in the short term, headlines move the market, but in the long term, execution creates value. So today's conclusion is simple. Tesla's story is still exciting, but it is becoming more measurable. And for long-term investors, that is a good thing. The more Tesla turns future promises into real-world execution, the easier it becomes to judge the company not just as a dream, but as a business. If you found this analysis helpful, please hit the like button and subscribe to Life in the Future. Thanks for watching, and let's keep enjoying life in the future. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere, so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.